Given all the political situation and the deteriorating economic crisis in Canada, a lot of Canadian immigrants are looking to move out of Canada, either going back to their country or moving to another country like the US. And I made a couple of videos on my channel about this subject as well. But then I realized that for immigrants, it may be an easier move to get out of country, because if you are new into Canada, maybe like 3 years, 4 years, or 5 years, and you're not established anyway, maybe it's easier for you to move out and then go back to your own country or move to another country to start over. But for the Canadians who are born and raised here, who have their family ties, who have their friends, their cousins, their grandparents, have strong ties here in Canada, maybe it's not easy for them to move out. And I know that because I'm an immigrant myself, and I made that journey twice in my life. So I was born and raised in Pakistan. I left Pakistan. I left my parents behind. I left my sister, my cousin, my friends. Then I moved to UK for my postgraduate. After that, I started working in UK. So I started from scratch in the UK, got married. One of my child was born in the UK. Then I left everything behind and moved to Canada, right? Started over, right? So build relationships, another child was born here, start buying a house and start, living a normal life here. So it's not easy to basically transition out from one country to the another. So I understand for Canadians who have a lot of strong ties here, it's not easy for them to leave everything behind and start over in another country. So I was walking outside and I was thinking, for those Canadians, what they should do given all these political and deteriorating economic situation in Canada. Maybe they should wait until the elections and they vote Trudeau out and hope Pierre Poilievre will come and fix things. To be honest, guys, I don't trust any politician. It's a hope, and hope is not a strategy. Okay, to me, politicians are all cut from the same cloth. All have the hunger for power and control. Okay, they can say something in the election campaign. They can completely change their policies once they are in power. Every politician wants power, control, authority. That has been the history. Okay, so I don't trust politicians. So I will not hope for Pierre Poilievre to come into the power and fix things for me. I have to take things in my own control, especially my freedom, my liberty, my financial well-being. So if I am one of those Canadians who are born and raised here, have family ties, relationships, friends and families, grandparents, then I should start planning to protect my freedom, my liberty, my financial well-being from today. So the first thing I would do is to take a step back and ask myself a question: do I have an emergency fund? Okay, so for me, emergency fund has to be a 6 months worth of expenses. So take a look at your monthly expenses and multiply it by 6. Do you have enough savings to cover your 6 months worth of expenses should you lose your job? If the answer is no, you should start building it right now, because God forbid if you lose your job, you will be on your own. The EI won't cut it, guys. Given the high inflation and cost of living in Canada, the EI will not cut it. Now you have the emergency fund, then I should take a look at my existing savings and start investing into it if you haven't done it. And for me, what I do is I will follow a very common strategy of investment called 10-80-10. What it is, which is 10% into gold, the remaining 10% into speculative assets, and the remaining 80% I should buy something that will pay me to own it. What does it mean? So gold is not an investment for me. It is not a speculative asset for me. Gold is an insurance for me. I will only buy gold if I wanted to buy an insurance policy. What does it mean? God forbid something happens to the financial system, the banking system collapse, the currency collapse. So you have something that you can transact outside of the financial system. If you own physical gold, you can go and sell it to anybody in any currency in any country. Okay, so that is your insurance, that you should have it at least 10% of your portfolio. Okay, now the remaining 10% I will put into the speculative assets like Bitcoin or cryptocurrency, and I will only put 10% because I know this is so volatile. I could lose everything. I could double it or 3 times that money. Okay, so I will only put 10% into any speculative asset. I should just buy just to give it a try. Now the remaining 80%, I will put it into an investment asset that is going to pay me to own it. What does it mean? So understand the difference between assets and liabilities. Assets are the one that is going to pay you to own it, versus the liabilities, which is only going to consume money from your pocket, like your car, like your primary residence, like your clothes, like your electronic gadgets. All of these things consume money from your pocket on regular basis. So don't buy liabilities, buy assets, like rental property that will give you monthly rental income, like dividend paying stocks that will pay you consistent dividends regardless of the price action. Okay, like treasury bonds, like GICs, which is going to pay you yields on a regular basis. So buy something that is going to pay you to own it. Okay, now you understand the 10-80-10 portfolio strategy. Let's go one level above, which is how you diversify your investment portfolio. Do not put all eggs in one basket, guys. Okay, if you're building your portfolio, make sure you diversify at every layer. So you diversify the stocks. Don't put everything into one stock ticker. Some in commodities, some in tech stocks, some in value stocks, right? Diversify it. Then you go one layer above, diversify the currency. You know the Canadian currency is going to be under pressure for some years to come. Okay, how would you hedge against that? You buy assets which are going to be denominated in US dollar. Whatever happens to Canadian dollar, at least we know that US dollar will stay stronger against that. Okay, so diversify from that angle. And then you go one layer more above, which is diversify the country. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later. I talked about Dubai in my previous videos, how Dubai is growing, hustling and bustling. There's a lot of investment coming into Dubai, a lot of immigrants moving into Dubai. A lot of rich immigrants bringing their capital in that country. And Dubai's currency is hard pegged with US dollar. So if you buy something in Dubai equity markets or the rental property, you are assured that you're hedged against the currency devaluation. Okay, that currency is hard pegged against US dollar. So that way you can also diversify from country politics perspective. They don't have capital gains tax, right? They don't have taxes on the income. So now you can diversify from a country perspective as well. To summarize, start building your emergency fund right away if you don't have it. Then you start investing by using 10-80-10 portfolio. Okay, then you diversify it. Don't buy just one ticker or don't buy just one single investment fund. Okay, diversify it. Buy commodities, buy tech stocks, buy value stocks, diversify it. Then you diversify from a currency perspective. Do not invest into Canadian dollar. Buy something in an asset which is going to be denominated in US dollar. Then you further diversify by putting something in another country like Singapore, like Dubai, which will give you currency protection because they are pegged against US dollar, but also giving you opportunity to stay outside of your political influence, of your government political influence. That way you can at least have some protection if you don't want to leave Canada. Okay, so these are just my raw thoughts of just having working outside, and I thought maybe I should make a quick video to share with you guys. Maybe you will learn from it. Maybe these ideas will benefit you in any shape or form. I don't know. You put your comments down below. Let me know what you think about that. And if you like this video, give me a thumbs up and subscribe, and I'll see you in my next video.